Hey folks, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as a thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and leave a 5-star rating. All right, folks, let's quickly take a look at the charts because Bitcoin has cooled down a bit. Right now, it's trading just over $79,000. As we've been talking about, the RSI in the daily chart is extremely overbought. Bitcoin is extremely overheated here. So you can anticipate some sort of pullback. And that doesn't mean there's going to be a major sell-off, but I think a cool down is certainly necessary because markets don't move up in a straight line. We also see the MACD on the daily chart shows the bulls are losing some momentum. They haven't fully lost it yet, and it hasn't flipped bearish yet, but you see the momentum is slowing down here. So if we could see a cool off, then another move up higher. And what may happen, there's a lot of bears are screaming, see, that's it, it's over. We're going to dump down to 40K, right? You could see a pullback maybe to 70K, maybe a little bit higher, and you trap the bears and there's another short squeeze because they're all piling in their shorts, right? So I think that could potentially happen. And the inverse confirmation of that is the USDT stablecoin dominance, which we were tracking because on the Bitcoin weekly chart, we saw there was a bullish divergence, and on the USDT stablecoin dominance weekly chart, there was a bearish divergence, right? So naturally, you have that inverse correlation. So on the daily chart for USDT stablecoin dominance, it is extremely oversold, so anticipate a rebound. And the MACD, which is showing the bears are in control, is losing momentum. So you're seeing the complete inverse here. So this is why I'm saying I think some sort of pullback is healthy and necessary, and I think most likely will happen before we move higher. Just based on the data now, not my feelings, not my emotions, not my hopes, just what the data is telling us here. And on that weekly chart though, overall, things are looking great. We still have room to run higher per the weekly chart, per the RSI, and the MACD shows the bulls are in full control. So this is the higher time frame. So regardless of whatever short-term pullback we have, this is screaming higher prices are coming. So the other factor, the inverse of that, is the USDT stablecoin dominance on the weekly time frame, also showing there's room for this to run lower. Again, this is the higher time frame. So we got the confirmation, is just being patient and let the market do its thing. Now, something I want to highlight, guys, that is not entirely crypto focused, but does involve asset allocation, which includes crypto. So a study came out saying a $50,000 income in 1990, the year 1990, would require roughly $130,000 in 2026 to have the same purchasing power. So we've talked a lot about currency debasement and why you need to diversify into assets. So not only crypto, personally, I hold gold, stocks. I have a traditional investment account and much more. I even have an investment property. So I'm diversified in that way. And I believe the only way to outpace the currency debasement is to allocate to assets. You have to put some of your money in assets because the governments, and obviously the United States included, they will continue to print more money and they will debase the currency. So the money that you have that you think it's in the bank, it's losing its purchasing power over time. So in order to, again, beat that, you have to diversify into assets. So something to think about. It's the main thesis as to why we're investing. We're not doing it so much for fun as we need to do it to have enough funds to retire, to live our life, right? Because we're going to just continue to lose purchasing power. This is the fiat system. And again, we've talked a lot about this over the years, but just a reminder, and this is just an interesting stat that I think is just hammers home that you need to have some sort of investment strategy. You got a dollar cost average into the market, have the long-term view. And look, I think crypto is still the fastest horse in the race here. Just yesterday, I reported that Bitcoin flipped NVIDIA stock to become the best performing asset over the past 10 years again. So crypto, obviously you have a limited supply. It's globally distributed, trades 24/7, and you have network effects, Metcalfe's law playing into the adoption of blockchains and all these things. So there's an exponential factor because again, these blockchains are globally distributed. But guys, again, you got to have an investment strategy. And a great place you can invest in assets like crypto, stocks, and precious metals is on iTrustCapital. So iTrustCapital allows you to invest via an IRA where you can get huge tax benefits. Because I'm sure some of you are going to say, Tony, why the hell would I want to invest via an IRA? Well, in that IRA, if you sell for a gain, you don't have to pay long-term or short-term capital gains taxes. That's huge, right? Because you know the government comes and takes a big chunk of your money when you have to pay capital gains. So huge advantage. And if you have an existing IRA or 401k, you can simply roll it over to iTrustCapital's version, and you can buy and sell these assets 24/7. It's low cost, no monthly fee. And with the crypto specific assets, you have over 100 digital assets in there: Bitcoin, XRP, Solana, all the top coins, even new coins. They offer staking, they have access to stable coins. And when it comes to precious metals, it's gold, silver, platinum, and more. So this is a really great platform that allows you to get access to all these different assets. They also offer what's called a premium custody account, which is really great because it uses institutional grade crypto custody, such as Coinbase Prime, which BlackRock uses. So you can sleep at night knowing you're getting the level one, the tier one of custodial services, and it's a closed loop system. So if someone hacks into your account, they can't withdraw funds. It's only set up to go to your bank account. It's also low fees and you can go in and out 24/7. So guys, you got to check out iTrustCapital. Great platform. If you sign up with my link, you can get a $100 funding bonus. Go to itrustcapital.com/go/thinkingcrypto. I also put the contact information for my rep. His name is Ryan in the description. So if you have questions as you're signing up, he can help you. You can reach out and get that white glove service. So check it out, guys. The link will be in the description. Now, folks, huge news from the banking sector. Here's the headline. U.S. state banking associations plan to launch their own nationwide blockchain network. You don't say. Of course they are, guys. Of course they are. The Bank Chain Alliance is aiming for a 2027 launch and would foster stablecoins, payments, and tokenized deposits inside the banking system's regulatory sphere. This is why they've been fighting stablecoin yield and why they weaponized Gary Gensler and Elizabeth Warren to fight the crypto industry. Blockchain technology is here to stay, but the banks have been left behind and now they're trying to catch up. So they're trying to slow down the crypto native firms. They're trying to slow down the asset managers. They're trying to block Clarity. They don't want anybody else to offer stablecoin yield because they're going to launch their own stablecoins. They're going to do tokenized deposits. And of course, they are the incumbents. They want to control the whole system. They don't want to lose power. They want to keep those big bonuses, right? They want to continue to pocket the majority of the money they're earning, parking your money at the Fed while they give you 0.01% the breadcrumbs. But clearly, this is a huge validation of blockchain tech, right? They're looking to build their own, guys. Now, I don't think this is going to be a public chain. I think this is going to be a private chain that is, the validators are all the respective banks. So let me give you some details. After a year of policy battles in Washington between bankers and the crypto sector, the banks' state associations have announced they intend to launch a new bank-run blockchain network to facilitate financial innovations, including smart payments, tokenized deposits, and stablecoins. 39 of the state banking associations signed on to the Bank Chain Alliance with an aim to build out the blockchain by next year. They said in a Tuesday statement describing the project as industry-owned, industry-designed, and industry-governed. It's an unprecedented collaboration representing thousands of banks, said Kathy Krangninger, the head of Florida Bankers Association and a former director of the Consumer Financial Protection Bureau. Krangninger, who is serving as an interim chair of the project, said it'll be secure, regulated network that allows institutions of all sizes to provide modern capabilities so they can continue serving customers safely and efficiently in rural, urban, and regional communities across the country. The Confederation of Banks is still looking to hire a technology partner to build the project, which it intends to be interoperable with other networks, according to the statement. So if this is a permission chain, kind of what JP Morgan built internally called Connexus, but all these banks are validators, but but no one in the public can just come build on it. That's fine. But remember, what have we learned? And even JP Morgan had to learn this. Public chains is where the liquidity is. Where the settlement has to happen. They can build their own internal thing and send each other internal stuff. That's fine. But if you're looking to get liquidity and adoption and so forth, you got to bridge to the public chains. And we're seeing a lot of permission chains are doing that. But clearly, clearly this technology is game changing, that the banks are now forced to go launch their own thing to try to catch up, try to create their own stable coins, but that doesn't mean it's going to get adoption. So let's see what they come up with. And could this actually work? If it's internal permission, sure, but don't expect the masses to necessarily adopt it. And again, they're going to have to bridge to public chains. Moving ahead, Franklin Templeton partners with HashKey to offer tokenized money market fund in Asia. So the tokenization race is heating up. All the major asset managers, even stock exchanges, are participating. Franklin Templeton, they got $1.7 trillion of assets under management. I've interviewed many of their folks, and they continue to expand. So HashKey said it has launched the Franklin On-Chain U.S. Government Liquidity Fund on the platform's Earn channel. The product is designed to offer Asian investors access to a tokenized fund that mainly invests in U.S. government money market instruments and U.S. dollar cash assets. Now remember, these tokenized funds, they're being built on public chains. Franklin Templeton has done it on Stellar, Ethereum, and more. So this is really great. And notice they're pushing it across the globe. They're pushing it to the Asian markets, right? So the race is on to get your product, your tokenized stocks, your tokenized money market fund, your tokenized equity fund, whatever it is, to different parts of the world. So that's one of the great benefits of tokenization, because this thing can trade 24/7 real time, and it's much more efficient. Settlement is instant, right? There's no T+1, T+2, whatever. It's atomic settlement happening. Now, speaking of tokenization, South Korea trade giant POSCO, I've never heard of this, brings trade receivables to the Avalanche blockchain in the latest tokenization move. Now, I'm bullish on Avalanche. I have the Avax token in my portfolio. And again, this is happening outside the United States. So obviously it's happening here in the United States, but also across the globe. So I don't want you to miss that. This is a global movement, a global asset class. So POSCO International, South Korea's largest trading company, is pushing deeper into tokenized trade finance, completing a transaction that turned real-world receivables into digital assets on the Avalanche-based blockchain network just 1 month after a similar pilot on the Injective blockchain. The firm's U.S. arm worked with the trade finance platform Olia, an asset-based finance technology firm, Intane, on the transaction. The company said Tuesday. Intane used artificial intelligence to reconcile invoices, purchase orders, credit notes, and shipping documents before verifying and recording the receivables on its Layer 1 network built on the Avalanche blockchain. Wow, guys. Look at what is being built, the infrastructure. And it goes back to what I've been saying for years. The future capital markets, economies, and governments will all run on blockchain rails. And we're seeing the building out of that infrastructure in different industries. And it's amazing what's happening. And as more legislation is rolled out across the globe, you're going to see more and more of this. There's going to be a standardization as to what these companies should be doing with tokenization. Right now, it's a little bit fragmented, right? Each country is doing their own thing, but eventually you're going to see the Bank of International Settlements, the IMF, and when they all meet at Davos, all the world leaders, right? There's going to be a standardization of all these things. So it's coming. Guys, book it. Now it's going to take time, right? But this is where you want to position yourself, grab up the tokens for the blockchains that are getting adoption, like Avalanche. Now, this is not financial advice, because it doesn't mean Avax or whichever blockchain is guaranteed to be a winner. But what you want to look for as you're going down the checklist of things you need to review for before investing, You want to see that this chain is getting real world adoption. It's getting a lot of activity, volume, tokenization, building. A lot of people are using it, right? So Metcalfe's law, network effects is happening for these chains. So this is really great, guys. This is news you want to share with the crypto skeptics out there and help them to understand the power of the blockchain, and they can be part of that network by holding the token. And there's nothing that's existed like that in the history of investing in technology. So this is amazing news. Now, some interesting news coming out around BlackRock and their Bitcoin ETF. So here, Nature Racy, who's an ETF expert, highlighted that BlackRock has cut the minimum for private in-kind creations on the iShares Bitcoin ETF to $1 million. It has now facilitated $5+ billion in transactions from private wallets. In other words, Bitcoin holders are moving from self-custody to IBIT. So IBIT is the BlackRock Bitcoin ETF, and that's the spot ETF. Here's a quote. People see things happen in the outside world, whether it's kidnappings, ransom, custody failures, that motivate them to make the switch for all or some of their holdings. Wow. So BlackRock's making it easy for people to move their Bitcoin over. That's incredible. And look, Amanda and I have been talking about it in our crypto water cooler episodes. I've mentioned it in my previous podcast episodes that as you have more hacks and all these things that are happening, people are not going to want to deal with the private keys and the risks and so forth, even though it's a great feature. That's not a bug, right? It's a great feature to hold the private keys to your assets. And I know the ethos of Bitcoin is to be your own bank, but we do live in the real world, and I still self-custody, but I have some of my assets, of course, on certain exchanges, not all. But if you're not savvy and you don't want to think about it, and I think about the average Joe and Jane, who are getting into this asset class, they're not going to want to deal with private keys, guys. Let's be real. It's too much friction, and they're going to go to services that they know of. They know BlackRock, they know Fidelity, and the ETFs, they're familiar with those products. So it's a easy sell to say, wait, I could buy Bitcoin in an ETF. So let me do that on my Robinhood account or whichever account, Charles Schwab or whatever it is, right? It's an easy sell and an easy thing to do. So BlackRock recognizes this, and especially with the recent Cold Card hack, that's a self-custodial wallet that was not good. I think you're going to see a lot of people move to ETFs, guys, and BlackRock is setting up the on-ramps for that. Okay, moving ahead, the ZRO token surges as LayerZero unveils Atlas exchange infrastructure built on Zero blockchain. Now, I don't hold the ZRO token for LayerZero, but this seems like a good update. I'm sure many of you may hold this, but let me give you the details. So LayerZero, a blockchain interoperability protocol helping cross-chain transfers, has announced Atlas, a new exchange infrastructure for trading platforms and financial institutions. Atlas, short for aggregated trading, liquidity, and settlement, is built on the Zero blockchain that LayerZero announced in February in collaboration with Citadel Securities, DTCC, ARK Invest, and Intercontinental Exchange. Zero is designed for financial markets and uses zero-knowledge proofs to verify trades on-chain. If I'm not mistaken, I believe Citadel Securities bought a bunch of the Zero token. And I remember at around the same time, BlackRock had bought a lot of the Uniswap token. So this may be a token you may want to look into. I'm not saying you must go invest. It's not financial advice, but if you got big institutions backing it and participating, right? DTCC, Citadel, Intercontinental Exchange, and more. This is something I'm going to look into adding into my portfolio personally. So looks like they're making some progress here. So LayerZero said Atlas is a headless exchange, meaning it does not have its own consumer app or trading platform. Crypto exchanges, brokers, and financial institutions can use Atlas at the back end while keeping their own users and interface. Very interesting. So this is kind of like a white label type of product here that almost anybody can build on. And guys, again, look who's participating. Citadel, DTCC. So this may be a project to research. I'm not telling you to go invest, just research, do your homework, right? Go through all the different things, look at the tokenomics, all these things. But looks like a big update for them. Moving ahead, World Liberty Financial, which of course very connected to President Trump, launches USD1 natively on the Canton network. So I'm bullish on the Canton network. I hold the token. I told you guys about this right before the token launch. And World Liberty Financial continues to grow their stablecoin, even though I've been saying I wish President Trump and his family will cool it down. Let's get the Clarity Act passed because the ethics issue is a big problem. And Elizabeth Warren and her cronies and the anti-crypto army are ready to jump on any news or opportunity to say, see, this guy's profiting. We can't pass the bill. And she's going to get, the ears of a lot of people in the Senate and more. So I pray there's no more updates from President Trump and businesses connected to him as far as crypto before, September. We got the vote scheduled for the 15th. But nevertheless, this is good for the Canton network. I don't hold anything with regards to World Liberty Financial, but I do hold the Canton network token. So I'm happy about this. All right, moving ahead, Robinhood Chain Decentralized Exchange, or DEX, Arcus launches P tokens to turn perp accounts into transferable ERC20 tokens. So this is interesting. So I just recently had the head of crypto at Robinhood on, Johan Kerbrat, and we talked about the Robinhood chain, which is seen a lot of growth, guys, a lot of momentum, a lot of building there. It was a very smart move on their part to launch it. So looks like they're doing a lot of building and innovation here. So Arcus has launched leveraged ETF style contracts on Robinhood chain, turning perpetual accounts into transferable ERC20s that can move across lending markets and other on-chain protocols. Each P token represents pro rata ownership stake in an underlying Arcus perpetuals account at a fixed market and leverage level, the team explained. Now, I can't even begin to explain this myself. This is a little bit outside of my wheelhouse, but it's great to see the innovation that's happening. And, Robinhood Chain does not have its own native token, but it's built on Arbitrum, which is an Ethereum layer 2. So if you wanted to get, let's say, exposure to this, so to speak, you can use those tokens. You can hold those tokens, right? I personally hold ETH. I don't have any Arbitrum tokens in my portfolio. Look, it's not possible to hold every token. So this is where you want to be smart, right? You don't want to spread yourself too thin. You do want to just pick maybe a handful of winners. And I know some of you who are channel members have access to my portfolios. So you're probably like, Tony, what are you talking about? You got like 10 tokens in your portfolio. Yes. And some of them are from a long time ago. I bought super cheap, guys. I've been in the market since 2016. So some of them I have in my portfolio, but I haven't been accumulating more of. And it's just like, I'm waiting, for the prices to go a little bit higher and much more. So this is really great adoption and more power to Robinhood. They're getting huge adoption here. Final news item, Galaxy expands retail crypto lending with new Bitcoin, Ether, and Solana backed credit line. So you're seeing a lot of crypto lending products being developed, not only by crypto native firms like Galaxy, which is Mike Novogratz's firm, but also TradFi institutions are doing this now. And I think the big banks will eventually offer this. And I think that will be a big one because let's say you go with JP Morgan or Citi and to buy your crypto and you're custodying with them, they will offer the lending to you, right? You can get a line of credit off your Bitcoin and your crypto assets. So the crypto-backed portfolio line of credit lets eligible Galaxy One clients borrow cash against Bitcoin, ETH, and Solana without selling their holdings. The revolving credit line combines eligible assets as collateral, allowing clients to tap liquidity for expenses or investments while remaining invested in crypto. So all the moving parts and components and bells and whistles that exist for traditional assets are being built for crypto. So this is how early we are, guys, and this is just the tip of the iceberg. You're going to see more and more and more of this. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Be sure to support the podcast by subscribing to my free email newsletter. It's 100% free on Substack. I do a write-up every week. I'll be putting out a write-up tomorrow. So make sure you subscribe. Again, it's free. It doesn't cost you anything. Check out my book on Amazon. It's available in paperback and digital. Grab a copy. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto and blockchain tech Right now, we got a huge sale going on. Get 50% off the price of the course by using the code BEAR, BEAR, at checkout. And that discount is not going to last long because we are at the cusp of flipping into a bull market. So that discount's going to disappear, guys. So make sure you grab that discount before while it lasts. But anyway, guys, all the links will be in the description. Thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.